Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, May 21, 2015. Inside the numbers tonight, of course, we're going to talk about the SPY and the E-mini. We got a little bit of a melt-up going on. Crude oil, gold, bonds, and the U.S. dollar. Not much happened today, but some stuff happened, so we'll discuss it and we'll just move on. So let's go over to the chart. And here's the E-mini chart. We're going to start with that tonight because I wanted to just review kind of where we are, where we were this week, and kind of go over some of the numbers. So here's what we had. So Monday, I had told you that it was a scheduled daily cycle turn, and it didn't seem like much. There really wasn't much of a turn, but at the same time, if you look up here, it was a turn. Here's Monday. We spiked up Tuesday. We finished, we went down a little bit, finished red, okay, kind of a, somewhat of a topping signal. And then yesterday we were down again. And then today we went down, and the best they could muster on the downside was the 2115. Well, we know that number's important because this line's been in here for quite a while, and I talked about it last night. And nothing else happened. Basically, the market is light volume. With light volume, there are no sellers out there. So in front of a holiday weekend, I'm not that surprised. I've been telling you that the market could potentially melt up. Now here's where we are. So let's look at that. Can the market melt up? Yeah. If in reality, okay, we should have seen more of a sell-off, okay, than we did. All right. When we saw 2 days, maybe you can count today, half day today, or this morning, overnight, actually. This was overnight as the third day, but that's not much muster on the downside. And when that happens, and they really should have gone down farther. They should have gone down another, let's say, 10 points, okay? And it's not much, but it was something. So the fact that didn't happen, now here's where some of that common sense comes in. The fact it didn't happen tells you that there's a bid underneath the market. It tells you that there's a persistent uptrend at hand, right? Remember, okay, and it's going to look sloppy, right? But I just want to show you the longer term picture here, okay? This is an uptrend, okay? How many times throughout this period, from down here up through here, how many times the folks that think the market's too high, how many times did you think it was too high all throughout here? Of course it's too high, but it's not too high because it's at the price it's at. And if you think in terms of what should be rather than what is, you're leaving money on the table. Okay, this is a time to be long the market on dips. I've been saying that for months. Each and every time the market took a dip, it was an opportunity to be long, and it's still going to be an opportunity to be long for a little while longer until it's not an opportunity to be long. And I'm going to tell you when that opportunity comes. It's just not here yet, and it will be, pardon me, it will be this year. Okay, we're going to see a hefty downside this year, but it's not here yet, and the market could always go higher than people think it can, and it can always go lower than people think it can on the flip side. Think 2009. Back when the S&P was at 1570 in 2007, did anybody think by March of 2009 we were going to be at 666 intraday? No, nobody thought that was even remotely possible. It can always go to extremes, and that's why you need to be aware and cognizant of the fact that it's not going to be that hard for them to push this market up higher. And I've been telling you that I have I had 2130 and 2135 as numbers. Where did we hit today? 2132 at the high. The other day, 2134. So guess what? 2135 is still not satisfied, and I'll bet you they get there. And then I have a 20 in the 40s, and it could go higher. Okay, this market could go higher. Now, what happens after Memorial Day? I wouldn't be surprised to see a pullback after Memorial Day, but at the same time, I'm not looking for much on the downside if we do get it at all. I'll talk about that as we get closer. It's just too far away. Tuesday is like eons away for me, so I can't really think that far ahead right now. So that's where we are. And if you just flip over to the SPY chart, it's the same. There's no difference, obviously. The numbers are different, but it's the same. I mean, look what happens here. It's just a persistent uptrend, and there's nothing on this chart right here telling you that the market wants to come down. You could have made a case that this was a topping signal 2 days in a row like this, and we could have come down farther, and we didn't. And they have to take the market. You have to take what the market is giving you. That's the way to make money, whether it's on the upside or the downside. Keep in mind the S&P is tricky. It's easier to trade individual stock names when you find bullish or bearish setup patterns. It's easier to trade that than it is the major index, because a stock with a bearish pattern or a bullish pattern can play out when the index is going the opposite direction. Happens all the time. Look at the trade alerts. Happens all the time. So anyway, that's that, and I think that's about it for the major index today. So let's flip over to gold, and gold is up a couple of bucks in the aftermarket, but it was down a few bucks in the regular session today, and that's okay. There's nothing going on here yet. I am looking for higher prices. I'm not looking for much more on the downside at all. If we do get more on the downside, where was the low today? Let's see, the overnight low was at 1200.8. So 1200 spot 80. And, could we get down to 1197? Sure, that's $3 more than we were at overnight today. And you see this line here, that's at 1297.50. And that's another major level of support for me. So you see where I'm going with this. I'm not looking for a lot of downside. I'm looking for higher prices. And you may not see them till next week. You may see it tomorrow. I don't know. But being long gold now is not necessarily a mistake in my book. GDX, I'll talk about GDX tonight. I know some folks like to talk about that. You see this upsloping trend line. This is the reason I haven't talked about it, is because we broke this trend line, and until we come down and test one of these two areas at least, I'm not going to be interested in the GDX. This is at about 19 and a quarter, and this one is at about 18 and 3/4, 1875, let's say. So until that would be a good level. I would buy that level here, but I don't know that you'll get there. The way you play something like this, since it is volatile and erratic, and it goes based on two criteria, both A, the market sometimes, and B, the price of gold. So what you can do is, if you got down to this area, maybe you take on half a position, and if you came down further, you lop on the other half, and see what happens from there. But until you, unless you recapture this line pretty quickly, I think you're just going to kind of go sideways to lower here, melt away down towards one of these lines here. And I'll keep you in the loop on that if I see something good going on there. By the way, let's flip back to the market. I just want to show you something today. Even though the S&P and the Dow has slightly eked out a gain today, a little bit of gain, 5 points in the S&P and all that stuff, the IWM is not making new highs. I talk about this all the time. I haven't talked about the new highs in a little while, so I think it's worth a mention. It's not making new highs, so that's something we should be concerned with. So up until the point in which I think you're finding a lot of resistance in this area. But if you should break higher, then I think you'll go to this double top here, which is around. Let's see what the number is. 127 and change. So you might get up to 127 and a quarter, 127.50, maybe just 127, something in that neighborhood if you broke up from here. And if you broke up, where would you go? Well, you can probably count on a move equal to about this candle here, which is from high to low is 125.16 and 123.17. So let's call it $2. So if you were to break up from here, from somewhere down in this area, $2, from 125, $2 brings you up to 127. You see where I'm going with that. That's that symmetry thing. And if you look earlier today, I posted a video that talked a little bit about market symmetry. It talked about how to find a top when a stock is on a runaway scenario. So it was on this stock here. I might as well bring it up. I talked about this, and how do you find how high this stock is going to go? And it's a good exercise. It's only a few minutes long, the video. So if you want, go check that out. And it's on the YouTube channel. And it's just a good educational moment. So, all right. So we talked about IWM, no new tops, not making new highs. So I think that's a little bit worrisome, but I'm not doing anything based on that alone. I just think it's of note. So we talked about gold. Let's go over to oil. And that's not oil. That's the bond market. Where is oil? Here we go. That's the old oil chart. Whoops. Where is my new oil chart? Okay, I thought I had it on here, and I don't. So let me type it in. CLN as in Nancy 15. And I could have sworn I did. I did have the lines on there. Okay. Anyway, so as you can see, we're in the middle of a range, right? Here's the top end of our range at this pivot high. Here's the low end of our range at the breakout level. And I think that it's a tough trade right now because you're in the middle of the range. And if you're in the middle, how do you know which way it's going to go? Was I able to tell you oil was going to go up today? Well, no. So I don't know if it's going to go up or down tomorrow. But when we get clarity in terms of a better pattern or a pattern that's readable, or we get to one of these levels, and dependent upon how we get to one of these levels, that would constitute a trade or a possible trade. But right now, in the middle of the level, hovering right around the 20-period moving average, I don't know. Here's the bullish case above the 20, closed above it today. You're above the 50. You've spent a lot of time in the middle of this range. You only touched the top of it once. Does it want to retest the top of this range, or does it even want to potentially break out of this range? Maybe. The bearish case, you're in the middle of the range, and you could go lower. I don't know. There is no bearish case. It's just in the middle of a range. Pardon me. That's funny. I really didn't have a bearish case, and I really don't have a bullish case either, and that's why there's no trade. You're in the middle of the range, so there's really nothing else to talk about on oil. Bond market. We'll take a look at TLT. TLT had a nice update today. And let's see where we closed. I didn't even check this out before. 120.43 was the number. We closed at 120.35. So not yet. We've got to get a close above 120.43 in order to make me more comfortable, and that would be case for higher prices. And it may turn out that this was a good level, and it was a good level. 118.21. I mean, that's spot on, right? What was his low here? 118.13. Against 118.21. That's pretty spot on. That's pretty good. So will that hold? Looks good for now, but wasn't good enough for me yet. I got to see more. But if we get a good close if we get a good close tomorrow on Friday, then I would suggest that you could take a run up to 123, 124. So that's where we are. I'm kind of in a holding pattern on that one, but we'll keep an eye on it. The dollar. So the dollar, I mentioned that we had these 3 days up, and that it looked like somewhat of a topping signal here. It's not a true topping signal, but it's somewhat. I take it as a signal. It's not a topping signal. It's just something for me to take note of. And I said that we would probably see some downward pressure. I'm not sold on the up move yet. I'm not sold that this is the low. You came down below this very important line. Okay, this level here is good support, but it's not great support, right? So if we go to my weekly chart, all right, it's good support, but it's not great support, all right? So, and we never got there, which means that with a level unsatisfied like this, it just makes me believe that we have lower prices to be had. And if we do come down, and by chance we came down and pierced through the 200-period moving average, which is not going to be easy, but if we came down to about $90, that's my level. And that's the level that you can buy with three hands, and I wouldn't be shy about it. And at the time, I'll tell you when we get there, obviously, but at the time, where's your stop out? Well, your stop out would be a close below about 88. That's okay. In other words, for a trade where I think it could be a blockbuster trade, a 2-point stop out, no problem. I'll take that all day long, because I think it could be a multi-month rally, persistent, and one of those lower left to upper right persistent moves, just like this. Okay, I think it could be that again, and more. So, all right, so that's where we are. I think I covered everything I meant to. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.